Hi, everyone. It's Joe Veneri, the host of Fit Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today, I'm joined by McConnell Smith of VMG Partners, a private equity firm focused on growth stage investments. In this episode, we explore emerging opportunities across fitness and wellness. We discuss VMG's new $850 million fund, including the firm's approach to backing consumer and health-focused brands. McConnell talks about VMG's investment in solidcore, a Pilates-based boutique fitness concept. Let's get into it. A quick reminder before we get into today's show. Every Tuesday, we send a weekly newsletter filled with insights and analysis on the business of fitness and wellness. Join other decision makers and industry operators by subscribing at insider.fit.co. Let's get into it. Hi, McConnell. Welcome to Fit Insider. Thanks for joining us.
No, thank you for having me. A big fan of what you guys are doing here.
Appreciate it. Excited to kind of get you looped in on the conversation. And I think to kick things off, why don't you just tell folks a little bit about yourself and then obviously about VMG?
Yeah, definitely. So VMG was started about 15 years ago and really with kind of a couple of primary goals. The first is just to support founder-led businesses. That's been a core piece of everything we've done since inception. We really love partnering with entrepreneurs and just helping channel and accelerate their passion. The other piece is we get really excited about partnering with consumer brands. That every business that we've invested in has been a consumer brand, a lot in food, beverage, personal care and beauty, pet, nutrition, and fitness are kind of our core categories. And really any brand that has sort of a kind of an opportunity to interact with the consumer on a recurring basis is kind of where our primary focus is. We're sort of, I'd say, stage flexible. You know, we're not a really early stage venture fund where, you know, we're making super early bets, but we're also not a kind of more of a buyout fund where we're doing big later stage take privates of mature businesses. We're growth investors kind of first and foremost, and get really excited about partnering with brands that are in that formative growth stage. And then kind of how you define that is you can be fairly flexible there. But that's really where we get really excited about partnering with brands and where our primary focus has been. I'd say the other common thread across all of our brands and companies that we've invested in is there's some sort of health and wellness angle. And I think, again, you can define that different ways for different consumers, just how they view health and wellness and what constitutes healthy for them. But we're big believers. I think we've seen, as you guys have, and I think many of your listeners have, this massive shift in how consumers are thinking about their overall health and wellness, and this big push and desire for consumers to become healthier and to lead healthier lives. And we're big believers that the brands that are really providing those healthier options and alternatives for consumers, whether that's through what they eat, what they're putting on their bodies, how they're working out, that those are the brands that are going to continue to win and grow and take share from, you know, kind of incumbents across these categories that maybe aren't providing those alternatives. And so every brand that we partner with really has that health and wellness goal as part of their mission. And I think we've been really successful across all of our categories at sort of kind of staying ahead of the curve on kind of just wellness trends and where the consumer is really moving. The other thing that we really like about those core categories is that there's a lot of similarities in the consumer that you're speaking to. And so the consumer that is buying a Quest bar or drinking a Spindrift is very much the same consumer that is working out at a solidcore or, you know, probably likely has a Peloton or some of these, you know, kind of really incredible brands that have been built on the connected fitness space. And so even though they are in a lot of ways very different business models and different categories, you are really fundamentally speaking to a very similar consumer, and a lot of the principles of brand building are similar as well. The other thing we really like about that sort of sector focus, I think we're a bit narrower than most other funds in our sector focus, is it really enables us to spend a lot of time diving really deep, not just with brands that are looking to raise capital in the next 30 or 60 days, but to get to know earlier stage founders, to get to know people who are really on the cutting edge that might be a little bit early for us to invest in out of our growth fund, but who are doing a lot of things and disrupting these categories in a lot of ways that are going to inform the way consumers are engaging with these products and services over the next 5 to 10 years. And that gives us a really good understanding. We learn a ton from conversations with those earlier stage entrepreneurs. It also enables us to really dive in with, we talk a lot about ecosystem building and developing relationships across the broader ecosystem. So getting to know retailers, getting to know data providers, getting to know operators that may not be immediately actionable investment opportunities for us as a fund, but enable us to be much better partners to our brands once we invest in them. And so if our brands are coming to us and saying, hey, how did brand X, Y, or Z do this? Or, what are some tools or resources that I can use to help deal with this problem? We've invested the time and the energy to sort of get to know that pool of resources. And again, it helps us be, I think, better partners to our brands, because a big part of what we do is we never want to be passive capital. We think really hard about, investing and being selective and investing in the opportunities that really are where we are uniquely situated to kind of stack the deck as much as possible in our brand's favor. And so that's kind of how we think about the world. Like I said, we've been around for about 16 years and are investing out of our 4th fund right now. And then about a year and a half ago, we also raised an earlier stage fund that is called VMG Catalyst, that is more technology focused. Because the other thing that we saw, in addition to this pervasive health and wellness shift, we saw really kind of the union of kind of brand and technology becoming increasingly important. I give Carl Stenmark, my partner, who kind of leads our Catalyst Fund, a lot of credit on having the foresight to really be very early in identifying the importance of that. But, we consistently saw that not just with our direct-to-consumer brands and businesses, but really with any of our brands, if you did not have very strong digital capabilities and proficiencies, if you were not able to kind of keep pace on as technology continues to accelerate, then you're really in a lot of ways falling behind. And so that has been a really nice complement where they're investing in a lot of businesses and in kind of the world of what they call commerce enablement. So the tools and the systems and the platforms that are really empowering and enabling our consumer brands, and the ability to tap into their expertise and leverage a lot of those platforms has been a really, really nice, unique combination that I think has been another way that we've really been able to really uniquely beneficially partner with our brands out of the growth fund.
Yeah, for sure. And I think so much of what you're talking about, we're seeing as well across the industry. And when you talk to different investors and founders, is this idea of health and wellness. It means practically everything at this point, right? Like everything that you do as a consumer that moves you toward that kind of better for you or improving well-being. There's so many different ways to kind of slice it up. So I'd be curious, just given that thesis that it is, consumer focused, and then there's like a health and wellness kind of slant as well. How do you go about identifying and evaluating these opportunities between this is going to be big, or this is going to be a fad that burns out, or, this is something you mentioned, talking to founders, taking that holistic and kind of ecosystem approach. When you start to kind of get the sense that, oh, this is bubbling up to the surface and it's going to be big, like what even goes into the decision-making around that?
No, totally. I think you're absolutely right. And I think that, health and wellness really is everything. And so I think that's been a really interesting shift. The way we approach it is really more from a micro first standpoint. What I mean by that is we never really go into a category or a trend and say, hey, this ingredient is really, like collagen is a good example. We never really looked at that and said, hey, collagen is starting to take off. We as a fund need to go get exposure to collagen. What we really try to do is get to know great founders who are super passionate about building their businesses that have a real, I think, kind of defensible brand. Because in consumer, and you see this, others on the show have kind of talked about it. Your defensibility in consumer really comes from your brand more so than your product or your technology or your service. And so we really kind of try to find those brands that really are differentiated and kind of have that sort of clear articulation of why they're different and why they're filling a gap in the market. And that's really kind of the initial kind of, I'd say, more qualitative screen. Then you start to get into kind of more the quantitative analysis and, are there healthy unit economics? Does the brand have strong, unit level margins or gross margins, whatever it might be? Does it have the potential to scale? Because I think what we have seen is that, you kind of talked about scalability and kind of overall opportunity. And is this the next big thing? We don't necessarily need all of our businesses to be the next billion-dollar brands. Like for us, we actually take, I think, even though we're growth investors, we need our businesses to grow to return capital to our investors. We, I think, by and large, have taken a maybe more kind of disciplined approach to growth, where it's really about being honest about the market size, the market opportunity, and then investing behind growth in a way that is commensurate with what that market opportunity is. And so for some brands in really, really big, massive categories where there's maybe not an established leader, the right strategy might be to really drive really hard and invest very heavily in marketing and raise a lot of capital to go out and do that. Because if you're early, then, the size of the market, really warrants that type of strategy. For other businesses, they've carved out a really defensible, really interesting niche in a given category that maybe the category is not going to get that big, but it's always going to be around. And there are, a core passionate group of consumers that get really excited about it. And in those cases, again, I think it's about being a bit more targeted and really, dialing in who you're speaking to and who you're trying to acquire and probably pushing to profitability sooner. And so we spend a lot of time thinking about that and really, again, trying to be honest about what is the market size for this and then kind of creating our strategy around that. And so that's really kind of how we do things. We try to stay away from, you kind of talked a little bit about or asked a little bit about fad risk. We've continued to see that anything that is really ingredient focused versus brand focused can be a bit of a challenge. On the fitness side, I think you've seen a lot of more studio concepts that do very well in kind of top tier markets, but have challenges expanding beyond that. I mean, we made an investment in a business recently called Solidcore. It's a kind of intensified Pilates studio concept. And one of the things that we really, really loved about that, in addition to just the amazing founder and team there, was that they'd proven that the model worked outside of New York and LA. And so for us, it's about looking at, historical examples of where maybe businesses have flamed out or failed to scale, and then trying to learn from those while also kind of laying in those more macro dynamics and making sure that we're, pricing our investments, but then also more importantly, structuring our growth strategy around what the true opportunity is.
Yeah, you mentioned a couple of things in there. So, looking at the brand and the importance that that's going to hold, the kind of longevity and staying power beyond a fad or a single ingredient, and the fact that, maybe it doesn't have to be quote unquote the next big thing, but it has to be able to kind of bear that out over a period of time. And so when you think about early stage versus growth stage versus, some of the private equity and buyout, where you guys sit, you said it's kind of flexible, but are there even, whether it's revenue, traction, different metrics that you're looking at that you have to check from that box? Or is it a matter of there is some room to take some of that risk around, just the brand, the founder, the team, the market, that, some of the early stage investors are able to place their bets there? So how similar is it to that early stage? And then how just fundamentally different is it at that growth stage?
Yeah, no, it's a good one, and one that we kind of talk about and debate a lot internally. At its core, really the question we're trying to understand is that one around staying power and real proof of consumer repeat and brand affinity. And so we don't have sort of a formal threshold on, it's got to get to X million of revenue or be this many users or, this many studios before we get comfortable investing. Where we spend a lot more of our time digging in is, if it's a direct-to-consumer brand, looking at retention, looking at repeat rates, looking at, the health of kind of our various cohorts. That to us ends up being, I think, more important than overall, just top-line growth and top-line revenue. On, the studio side, it's very similar, right? In fitness, we're looking at retention, we're looking at repeat, we're looking at, engagement and how passionate people are about these types of things. We also spend a lot of time and think that, kind of organic acquisition is a really good predictor of sort of brand strength, where people are, you're not just paying to buy users or to drive traffic to your gyms or your studios. You're getting that word of mouth referral. You're getting people talking about the product. We talk a lot about sort of the badge effect of our brands, where it's not just that people enjoy consuming your product or going to your gym or studio. They want to talk about it. They want to tell their friends about it. So we look at that a lot. In reality, kind of the practical limitation of that is that a lot of that just takes a bit of time for that to develop and evolve and for us to get comfortable with that. So I would say most of our investments end up being into businesses that have at least 10 million of revenue. Again, that's not a hard and fast rule, but that is where, you kind of have the time to develop and prove that, hey, this is something that is not just we're really good at performance marketing, or we drove a little bit of initial excitement and, it's still TBD on whether this really persists. Because our strategy as a fund is to really be very concentrated. We want to call it 12 to 15 investments per fund, and we want to lean in really heavily and provide a lot of support and guidance and resources to each of those. And for us to be able to do that, we need to ensure that each one is really winning, right? Our portfolio is not 100 investments and the 5 runners are carrying our returns. And so that's why we place so much emphasis on getting comfortable around that sort of, repeat consumer affinity and kind of staying power.
Yeah, it kind of perfectly lines up with a question that I had as well, and just kind of looking from afar at the investments that you have done and potentially how you're engaging with those companies. How do you think about VMG's role once you have made that investment? You said, you want to lead in, so that, my question was kind of around, is it more hands-on or more laid back? Sounds like definitely more hands-on, but what does that involvement look like? And I'm sure it differs on a company by company basis, but just in general, thinking about kind of bringing value to the table.
No, you're totally right. It definitely varies company to company. We try to be very careful not to be too prescriptive and say, hey, this worked for this brand, and so you should do the exact same. It's more about kind of learning from that and applying it where it's relevant. But a few of the just general areas where we end up getting very, very involved. The first one is on talent and hiring and recruiting. That is so huge. I think if you have the right brand and the right people, then you are, I don't know the right percentage, but 80-85% of the way toward a successful outcome. And so we actually have an internal talent team. We got 4 people, soon to be 6 people. Cassie Nielsen leads that team for us, and she's absolutely incredible. She is by far the most valuable member of VMG. But we spend a lot of time really early in the investment thinking ahead on, okay, what are the key hires we're going to need to make in order to scale to where we're going to need to get to, and how can we think proactively about helping do that and identifying the right people. We've really found that if you nail the right team within the first 12 months of investment, it's very highly correlated with a successful outcome. So that's kind of the first area. The second area, and this is a benefit and a byproduct of being so category focused, is at any given time, we've got 20 to 25 brands in our portfolio that are dealing with a lot of the same or very similar challenges. And so we try very hard to facilitate conversations between those brands. And some of it is formal and structured, where we're creating these kind of learning opportunities for brands to talk to one another. But a lot of it is informal. We think that the sort of the more structured are really just an opportunity for people to meet one another. And then one of the things we get really excited about is when they start chatting just directly with each other. So, the head of marketing at one of our wellness businesses can go talk to the head of marketing at something like a solidcore and talk about doing different partnerships, or, how they're thinking about some of the kind of digital marketing changes, whatever it might be. And so that ends up being, I think, a really, really kind of powerful benefit and really big way that we're able to kind of impact some of that. The other things end up getting a bit more customized. So, we might do a lot of work around pricing strategy. We might do a lot of work around kind of different growth opportunities and where we want to take the business. But we try for those types of things, those end up being a bit more company specific. We also, even though we like to be hands-on, we like to be actively engaged, we also acknowledge that none of us are operators, none of us have operating backgrounds or experience. And so we kind of view our role more as more of a pull model than a push model, where we never want to come in and say, hey, you have to use this resource or you have to do this. More, hey, here's what we're hearing. So we have conversations with other brands. Here's what we're seeing folks do and do well. Happy to make intros and things like that and be kind of that conduit for you, the brand. But we're not the ones who are trying to kind of overstep our bounds and actually make those day-to-day operating decisions.
Yeah, sure. There's something to be said for that as well, that if you were, then maybe it's not the investment that you maybe should have or would make in the first place if you have to come in and do that type of work. But definitely see how it can be valuable to have somebody, who's obviously has skin in the game, wants there to be success, and is able to assist in these different areas versus, it's difficult as a founder to be out there on your own, even as you're building the team. So having that, totally. that value add is definitely important.
No, I always say, like, if we're ever in a position where I'm running the day-to-day of a business, then we have much bigger issues. We're in some real trouble at that point.
Yeah, absolutely. Wanted to circle back. You did mention it, the investment in solidcore. So boutique studio brand, kind of resistance-based Pilates, and has had success and is certainly kind of defining that modality. It's definitely different than traditional Pilates. And I didn't know, I think this is one of the first kind of fitness focused companies, investments that VMG has backed. So I just wanted to hear kind of your thoughts on, moving into the fitness space, backing the kind of brick and mortar, and how you think potentially this is all evolving given the state of COVID and getting back to gyms, digital fitness. So I know it's a loaded question, but I just kind of wanted to hear more about your rationale and thought process there.
Yeah, no, definitely. I mean, all I think very, very good questions. You're right. It is our first investment in the fitness space, and this is something that we really started having conversations about this, 2.5, 3 years ago, and I think the excitement around the fitness space really stemmed from some of what we talked about earlier, which is that sort of similarity in consumer, where yes, you're learning a different business model, but in a lot of ways, those principles of brand building and speaking to a consumer and acquiring new consumers and building excitement around that brand are very similar, and we think very transferable across categories. And you layer on top of that the focus we've had as a fund around health and wellness. And it was a very logical extension for us. So we've been doing work in the category for a long time that predated COVID by several years. Obviously, when kind of COVID hit and just totally disrupted the category, it was an interesting time to be looking at this space. But we really got excited about solidcore, I think, for a couple of different reasons. And the first was, as I mentioned earlier, they'd really proven themselves in a bunch of different markets. And it wasn't one that was, just kind of we've seen, at least based on some of the work that we did, that, those brands that didn't necessarily extend or expand beyond New York and LA and some of the coastal cities. There was a higher, I think, miss rate in some of those brands. These guys had gone into, I think, 18 states at the time that we invested and did very well across the board. So we knew that there was really kind of universal appeal, or at least the potential to succeed pretty universally. We loved the team. I think Anne, the founder, is just an incredible person and just amazingly passionate about the brand and the business. And so you could see similarities to just some of those really unique traits that we've seen across our most successful founders. And then she had brought on a guy, Brian Myers, to run the business kind of more day-to-day. She's still very heavily involved, but he's just a very, very impressive operator. And so we took a lot of comfort that even though we'll be helping build the team, there wasn't a wholesale change required, and had a lot of confidence in them. The other thing, and our biggest question as we went through diligence around the business, was exactly like you said, it's an interesting time potentially to be getting into brick and mortar fitness, given everything that had happened. But we did a lot of consumer work. We talked to a lot of people. We really I think, primarily focused on that exact question. And all of our work consistently came back with a few just sort of key takeaways and conclusions. And the first was that by and large, people wanted to get back to working out in person. They viewed it as a better workout, a better experience. They got more out of it in terms of community and engagement. And that came through loud and clear through a number of different sort of sources and work streams that we did. There's still absolutely a role for the digital and the at home. And I think that the convenience factor, which was really the one area where it outperformed the in-person, is you can't ignore it. But the other area where we really liked solidcore was we really found and really believe that certain modalities and certain workout types are going to be better insulated from some of that shift to at home. So think about something like a Peloton that's doing an incredible job replicating the spin and the cycling experience at home. I think that's a tougher place to be than something like Pilates or even a traditional gym where you have specialized equipment. It's harder to do at home. It takes up more space. And just being there, being in person, it carries maybe just a lot more value or weight than in some of those other modalities. So we really like that about solidcore. You also need fewer people to fill a studio. We've got 12 to 15 machines in a studio versus 30, 40, 50 people that might be going to a spin class. And so even in kind of overall numbers, you just need fewer people to come back in order to make the unit economics work. And so those were really, I think, the key things that we dug into and looked at. And the connected, the at home, the digital, there are, I think, a lot of really fantastic brands being built in that space. And that's a space that we're very much excited about. But as we looked at it and looked at, just kind of the strength of the solidcore brand, the team and the founder, and what really just kept pointing to the business recovering over time as vaccinations improve and cases go down, we got very excited about partnering with them and making that our sort of first fitness investment.
Yeah, I think everybody's kind of watching. There are two extremes that you can take, that this is the end of brick and mortar gyms and studios, or, I can't wait to go back to the gym or studio. And I think that to some extent, having that extreme is like a good sign that people want to continue these habits and they're going to hopefully continue to live a healthier lifestyle. But there's kind of no doubt that the community element, the social element, it definitely has a place, especially among the stronger brands like solidcore who have done and can continue to do digital if they choose that's going to be additive to the overall experience. So it'll be interesting to see how it plays out. As you're thinking about the fitness space, is this, hey, we wanted to go and kind of get into the brick and mortar studio side, and now maybe let's do something in the digital fitness, maybe let's do something in wearables? Or is this, hey, let's just continue to evaluate the segment as it evolves and see where we can, get involved?
Yeah, no, it is definitely one that we are excited to continue making investments in. I think we try very hard not to do anything that's like, we're not going to go do another Pilates studio, obviously. But I think the nice thing that we've seen about the category is that people who are really into their health and wellness, that they're doing it across all of those different dimensions. And even within studio fitness, right? You see people jumping around from Pilates to spin to yoga to HIIT. And it's in some ways it's competitive because you're competing for their fitness spend and their fitness dollars. But in a lot of ways, having multiple brands is complementary. I mean, you look at what Exponential has done, and they've done an incredible job sort of, building different brands across those different modalities. And then, as you mentioned, with people being more interested in their sleep, their nutrition, their mental health, right? I think there are a lot of different opportunities within the space that, I think us having an investment and partnership with something like a solidcore just enable us to be even better partners to those types of businesses, because again, you're getting that learning about that consumer and how they're thinking about things. So long-winded way of saying, yes, we're very excited about it. I think we're excited about both the studio and traditional gym, kind of brick and mortar side of the category, but also whether it's connected or, I think wearables are really interesting because that's where you start to really kind of blend whether it's nutrition or sleep and recovery and fitness, like you're starting to wrap multiple of those different sort of pillars of wellness together. And I think you've seen consumers just increasingly aware of the interconnectedness between those. And so I think that's right. And that's an area where, our Catalyst fund and having a lot of exposure to the much more technical kind of technology driven side of the category, I think is really interesting and enables us to bring sort of a unique perspective that's not just purely brand focused.
Yeah, I think this, whether you think of it as building this portfolio or, integrated platform approach, ecosystem, like everything seems to be trending in this direction where, whether it's the holding company model or investments across the various sectors, like this shift towards consumer health and well-being is a powerful one, and it's a foundational one that's going to be here for years to come. It's not like we're going back to unhealthier ways. So I think that is interesting, and I think building on that point, as we get to the end of the conversation here, I wanted to get your take, and whether it's putting your investor hat on or maybe even consumer, just in terms of what you're interested in or excited about. Are there any trends or untapped opportunities that you're watching again as a consumer or potentially interested in backing?
Yeah, I mean, I think so. I'll answer that sort of two ways. I think in kind of the immediate term, right now, and this is maybe a bit sort of obvious or biased by our recent investment in solidcore. I think the in-person, the brick and mortar, whether it's kind of more on the HVLP gym side or in studio fitness, I think that's a really interesting area because I think it's kind of, COVID has created this really big dislocation of the category. And unfortunately, a lot of sort of early stage entrepreneurial businesses may not make it. But I think just with the real estate market being where it's at and a lot of the fallout from the last, 12, 13 months, I think it's going to create a really interesting opportunity for sort of new entrepreneurs to come in and be aggressive, where maybe they weren't burdened by 200 leases that they had to deal with through COVID, and so they can be a bit more nimble coming out of this. So I think that's a space that in sort of the relatively kind of near to medium term is really interesting and really exciting, and we're spending a lot of time in. I would also put outside of fitness, kind of more broadly wellness services. So whether that's kind of tanning or recovery or, thermal spas and those types of things, I think are sort of kind of fall into that same group where it's still retail based, but kind of highly wellness focused and sits kind of in that same ecosystem or group as kind of the retail based fitness concepts. Longer term, and this is something that I think is still very much developing. I think businesses that are able to kind of, we talked about some of those different pillars of wellness, whether it's, fitness, recovery, nutrition, sleep, businesses that are able to really integrate, two or more of those different pillars. And I think provide really kind of actionable, customized, personalized advice is really interesting. And I know that's a bit vague, but I guess that's because I haven't really seen many businesses that have really nailed that. But I think consumers really want to understand those linkages, and they want that information delivered in a way that is digestible and not overly scientific, but also actionable. And so I think if someone can really nail kind of, again, integrating sort of nutritional consultation with, sort of sleep tracking and recommendation and, personal training or kind of fitness programming, I think that's a really interesting idea and a really interesting concept, and one that I think as we get more data about consumers and what they're doing and how they're living their lives, I think those opportunities are really going to start to present themselves.
Yeah, I agree 100%. I think it's not only is it early innings, we don't even fully understand. We don't even know what we don't know yet. And so as those pieces start to get put together with the various technologies and insights, I think it's certainly an exciting time to be in this category and focused on kind of health, wellness, fitness, well-being. And with that, I think as we wrap up the conversation, we'll get you out of here on this. Where can folks learn more, get in touch, and check out VMG?
Yeah. I mean, our website is just vmgpartners.com. My email address is just smith@vmgpartners.com. So like I said, we've got the luxury of not being pressured to do deals. And I love having conversations with folks, early stage brands, folks in the industry and the category. I mean, I learn a ton from it. And ultimately, we want to be supportive to as many brands as possible. I'm a big believer that the more emerging brands that win and succeed, the better it's going to be for everybody. And hopefully a lot of those are in our portfolio, but even the ones that are not, we're rooting for you and want to be supportive. So, hopefully, if we can be helpful to folks, please feel free to reach out. And I'd also like to say, I kind of talked a bit about how we think about ecosystem building and just kind of supporting brands. I think huge shout out to what you and Anthony are doing with your platform and doing exactly that. I mean, I think it's the category and the industry needs more folks like you who are providing the resources and the connections and the insights for a lot of these early stage entrepreneurs. So I think it's really cool to see. And I think just what you guys are doing is super impressive.
Oh, I really appreciate you saying that, and just excited to be doing it, and like you expressed, really passionate about this space and enjoy chatting with folks genuinely and trying to help and continue to move it forward. So I appreciate you making some time today to help us do that, and definitely encourage people to reach out to you and chat and learn more.
Awesome. Well, no, thanks for the time. This is great.
Thanks everyone for listening to today's episode. For more from Fit Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then go ahead and subscribe, rate, and review the podcast. See you next time.